How I became completely financially free before I was 30. Most people never really build real wealth. We're taught this blueprint of investing for 40, 50, 60 years. But honestly, if you look at the statistics, that does not create wealth. And that's because you've been taught a broken blueprint. Now, most of you actually don't know. I'm 6'10", I played Division I basketball. And because of that, I tapped into this network that I had no idea I was going to tap into. When you play Division I sports, you usually have a booster club around your team. We'd fly around on private jets all across the country to all these different games. And what was sweet is we had the opportunity to interact with these people, and they were some of the best people in the world. They were running hyper successful companies, but so down to earth and willing to get to know you. So I was 2 years out of college, honestly pretty frustrated. And my wife was the one who was like, go tap back into that network. Like there's so many of them that you know that have done exactly what you're trying to do. Like go ask them how they did it. So that's exactly what I did. And it blew my mind. Yes, there's the principles of budgeting and like not getting in debt and stuff like that. But the real wealth creating principles is where they completely changed my perspective. The idea that I was just going to work for a job for 30, 40 years, put money into a 401k, earn 5 to 7% and compound interest would get me into retirement was not the case. It's not what anyone does that creates real wealth. You have to expand your horizon on how to actually create wealth. My mind was blown when I did it, and that's what we're going over today. Here's the exact blueprint I used to actually create financial freedom before you're 30. Let's dive in. I'm going to break this into two parts, okay? First part is building the foundation. Second part is how to actually beat the markets and get legitimate returns that can create wealth. I have to do part one before I teach you part two, because if you don't do part one, you will never succeed at part two. Part one, how do you build a foundation? You have to have a survival fund that you can survive on for 2 to 6 months if you lost your job. Now, I know a lot of you think that's impossible. I've done lots of videos on budgeting and getting out of debt and stuff like that. If you need help, search it, go find it. I will teach you how to do it. But you have to have a survival fund of 2 to 6 months. Then you have to have liquidity inside of traditional public investments. What this looks like, I'm going to go through this fast. If you want more information, I have tons on my social media, my link in bio. You should have a 401k, an IRA, a high yield savings account, your survival fund, a cryptocurrency account, and a brokerage account. These 5 accounts are going to give you diversity and a foundation of liquidity that will serve you for the rest of your life. About 10 to 15% of your income every single year should go into those 5 accounts. The goal is to save 20% of your income. Of the 20%, 10 to 15 of it is going to go into your financial liquidity bucket. The rest of it is going to go to part two. Inside that financial liquidity bucket, the only time you should go into that 401k is if your company has a match. If it doesn't have a match, don't go into it. 401k returns are honestly pretty bad. The next is IRA. Okay, I love the IRA because you have so much more control of it. You can go get into a total market index like VTI or VOO. You can invest in ETFs. Real diverse, low fee mutual funds and index funds is where your Roth IRA should be or your traditional IRA should be. The next one, cryptocurrency. Now, I know a lot of you are saying, oh, that's a home run hitter. I'm not asking for much. Put 1 to 2% of your income in there. That alone will not kill you if it goes to zero. Okay, it's a risky investment. You need to plan on it going to zero. But if it can do what it says it can do, it has the power to change your life. 1 to 2% should go into cryptocurrency. The last one is a brokerage account. After you either matched your 401k, done the IRA and cryptocurrency account, you need to put everything else inside that brokerage account so it can start to pool and start to build. A number that you need to understand is what historical returns are inside of these 5 accounts. Most people actually won't tell you what this is. They're like, oh, your 3-year return is this, or oh, your 5-year return is this. I don't care what my 3-year is or my 5-year is. I want to know what my return is over the last 10, 20, 30 years. If I was to be in those markets for 20 or 30 years, what would it be? Your goal should be 8 to 10% inside your foundation 5 accounts. You can get 8 to 10% there, and then we can go get 12, 15, 18% over here, and you can hybrid out between 12 and 14%. You are going to create real generational wealth. So here's a quick scenario for you just to prove a point before I go on to step 2. If you were to invest $1,000 every single month for 30 years and you went into a traditional 401k like you've been taught and you get a 5% return, which is very, very normal, you will end up with $832,000 at retirement. That would give you like $30,000 or $40,000 a year in retirement. Not bad. If we could take that return, same scenario, $1,000 a month, 30 years, but we could go get a 14% return doing this method, you will end with $5.5 million. These simple tactics of making sure you know your long-term return and trying to get to that 12, 14, 15% is what will create financial stability and financial freedom for every single one of you. Part 2 is private markets, okay? Most people don't understand the difference between public and private markets. If you can get it on exchange, Bitcoin, stocks, bonds, CDs, ETFs, mutual funds, anything that you can log onto a system and get is a public market. Private markets, though, are where you have to have a connection or a network to get introduced to one of these deals. This is venture capital. This is private equity. This is real estate syndications. This is some large scale developments in commercial real estate. This is like oil and gas and like alternative investments. Those are private market deals because you have to have a network. What blew my mind when I went back and tapped into that billionaire network from my basketball days is that those are the places they're starting to invest in. And you don't have to be a millionaire to invest in them. If you have the right network and you can be called a non-accredited investor, AKA I'm not a high net worth individual, but I know so-and-so and they do these investments, you can actually jump into these private market investments for not that much money. And so that's what they did for me is they started opening up these investments because I had relationships to them. They could allow me into these non-accredited investments so I could invest in their companies or invest in a real estate deal with them or invest in venture capital. And what's crazy is I started seeing 15, 20, 22, 24% returns on some of these investments. I still had my foundation. I was still living a budget, but I started putting little bits of money into these private market deals. And those little bits, when they add up, when you can get a 20% return over 3, 4, 5 years, your money doubles and triples so much quicker. And that's how you create real wealth. And that's how all of them do it. They invest in assets before they go public. When you invest in private market assets, because it's so reliant on your network, you're naturally going to probably get higher returns than just public markets. The stats show it. You can go look up the average return of private equity or venture capital over the last 20, 30 years, and then do that with the stock market. It's outperformed it every single time. And that's just because of the networks it runs in. But that is the key trick. You keep hearing me say network. You have to tap into the right network. And that was the part that I got lucky. I was born 6'10" and just dropped into a network where I could do that. That's the whole reason I started this page. That's the whole reason I started social media. That's the whole reason I started my Amplify company, is because I wanted to provide this education and network to the everyday person. I think it's dumb that just because they're born into these networks that they get to be more successful than more. That is like the definition of privilege. And I don't think they're necessarily gatekeeping from us. I just think that we just don't run in the same circles. And so my goal is to provide my network to grow your net worth. So yes, you have to go build that foundation. But once you've built that foundation, you're ready to level up and get into these investments. I want to be a resource for you to introduce you to these people so you can be a non-accredited investor, put a little bit of money alongside us and start to grow your wealth in a smart, diversified way. So instead of getting the 4, 5, 6% of your 401k, you can go get that 12, 14, 16% returns because you're diversifying into different deals that the average person doesn't have. So before I give you access to that network, I was asked a question, what are the 3 things you would do different if you were trying to go back and become financial free earlier in life? Here are the 3 things I would change, and then I'll give you the network at the end. Number 1, I probably wouldn't have played it safe so early on. And I know that's crazy because I did take a more risky approach. When someone says it's too risky, to me now, too risky is if it will disrupt the lives of the people around me that I love, then it's going to be too risky. If it doesn't, I should go for it, swing for the fences. Meaning, if I'm going to lose my house and have to move my kids into a different school district, too risky. But if it's not going to change their lives and they're not going to really feel it or know it, it's just making me uncomfortable, then I need to take those risks. I need to jump in because those risks will often be rewarded with a lot of financial gain. Number 2, I would have prioritized my network way earlier. My dad would always say there's 2 ways to learn, counsel or consequence. And I kept choosing consequence over and over and over until my wife finally told me, stop, you have a network that you can counsel from. The network that you surround yourself is one of the most important things in your life. And just because you may not have that network right now doesn't mean you can't find it. Find a way to tap into a network because that network will give you opportunities that you have never dreamed of. And I wish I would have done that earlier. And number 3, once I built that network, I would hone in the skills of analyzing investments. And I know that sounds so boring, but understanding how to analyze an investment is going to be the biggest return on investment you ever have. The richest people in the world, if I was to name one skill that Jeff Bezos, Elon Musk, Warren Buffett, phenomenal, it's mitigating risk. And they don't mitigate risk by actually stepping into the investments. Like Warren Buffett doesn't step into his investments and start running the company. He mitigates risk because his ability to analyze a deal. And so you're going to be terrible at the beginning. I was too. Don't be afraid of that, but use your network to start getting exposure to what these deals look like. Join calls, watch pitch decks. Like you could probably go find Meta's. I've never tried this, but like Meta's VC pitch deck, or like find some company and just start understanding and digesting that information, because your ability to analyze a deal to mitigate risk will lead to tons and tons of money. Dedicate an hour a month or whatever it is to just starting to research and analyze, and you will thank me, I promise, because it will lead to a ton of money. Those are probably the 3 things that I would have changed. Now, where do you go from here? If you want access to my network and everything that we talked about, how to build build that foundation, how to analyze deals, how to get into private market, what's venture capital, what's cryptocurrency, click the link down below. Okay, I created Amplify for exactly that. I wanted one central repository that can go from beginning to end. There are people in there that are strapped for debt trying to budget. There are multi-millionaires. In fact, I think there's a billionaire in there researching, learning, and getting deal flow across their desk. We have everything inside of Amplify. It's 100% free for the next 7 days. If you click the link down below, jump in, grab as much as you possibly can. The fact that you listen to this video tells me you're willing to actually take action, which is the exact type of person that I want in Amplify. So take me up on that offer, join for 7 days for free, figure out if it's something you want, and I'll see you in there.